Good morning. Everything you're about to hear is for education and entertainment only, not financial advice. So do your own research before making any moves. And with that, let's get into it. Because Wall Street is walking into a holiday-shortened week, sitting right at all-time highs. Here are the key themes driving markets this morning. The major indexes closed at or near record levels heading into the second quarter earnings season, with the S&P 500 capping off a strong first half that has bulls asking whether corporate profits can justify the altitude. Rate cut expectations are heating up after last month's surprisingly soft 57,000 payrolls print, with Fed funds futures now pricing in a greater probability of a September move by the Federal Reserve. SpaceX officially joins the NASDAQ 100 index, marking the first time Elon Musk's rocket company enters a major benchmark and giving passive funds mandatory exposure to the private-turned-public space giant. The 10-year Treasury yield is in focus this week as bond traders weigh the tension between sticky inflation data and a cooling labor market, with every basis point of movement carrying outsized significance for rate-sensitive sectors. Here's what's on the calendar for this holiday-shortened week. U.S. markets reopen today after yesterday's Independence Day closure, so expect lighter volume and lighter spreads as traders ease back into a compressed three-day trading week. Wholesale inventories data drops this morning, giving us a read on whether businesses are still building stockpiles or finally drawing them down, a quiet but telling signal for GDP revisions. Wednesday's release of the FOMC June meeting minutes will be the marquee event this week, as traders parse every word for clues on how close the committee actually came to signaling a rate cut. Consumer credit figures arrive later this week, and after months of rising delinquencies, the market wants to know whether American households are still borrowing or starting to pull back. Initial jobless claims on Thursday will carry extra weight this cycle, because after that soft 57,000 payrolls print, any uptick in filings could accelerate the rate cut timeline dramatically. Let's talk about who's reporting. Earnings season is about to unofficially kick off. PepsiCo reports as one of the first major consumer staples names this quarter, and investors will be laser-focused on volume trends to see whether price hikes are finally pushing shoppers toward cheaper alternatives. Delta Airlines steps up to the plate, representing the travel sector, and the read-through here is massive. Management's commentary on summer booking curves and fare pricing will set the tone for every airline and hotel name reporting later this month. So here's the big picture. Stocks are entering this holiday-shortened stretch near record highs, but with a light data calendar, it's really Wednesday's Fed minutes and Thursday's jobless claims doing the heavy lifting in the rate cut debate, especially after that shockingly soft 57,000 payrolls number last month. And meanwhile, PepsiCo and Delta unofficially open Q2 earnings season, giving us an early read on consumer spending and travel demand before the mega-cap wave rolls in later in July. And educationally, weeks like this are fascinating to watch, because the market has to decide whether soft jobs data is a good thing, meaning rate cuts are coming, or a bad thing, meaning growth is actually slowing. Once again, nothing you heard today is financial advice. I'm just here to help you understand what's moving and why. If you found this useful, hit that subscribe button, turn on notifications so you never miss a pre-market brief, and I'll see you right back here tomorrow morning.